Good morning and welcome back. On today's class, we'll be talking about the ATR indicator, which stands for the average two range indicator. ATR indicator is one of the most popular indicator in every trader is meant to know, and it is basically used for setting of stop loss. That just all it's being used for. In case you're watching us for the first time, my name is Shady BTC, and this is Dijan Power. Without wasting much of your time, let's get down to business. Looking at my screen right here, you see something that looks like a line chart. This is actually the ATR indicator, and it's being used to determine the volatility of the market, just like I said earlier. I look at it right now. I think, this is the ATR of Bitcoin. As you can see, right here with me, this is a Bitcoin here, and this is the ATR of Bitcoin. Looking at this point right now, this is how it's being used is when you take your cursor or you place it on that particular candle, the line on that particular candle, whatever it gives you is the ATR value. Looking at it right now, as it stands now, the ATR value of Bitcoin is 330, meaning that the volatility of Bitcoin at this particular point in time is 330. Taking it backwards down to this part, let's see, as of Sunday being day for yesterday, the ATR of Bitcoin as of on Sunday, 19th of May, around 12 p.m. The ATR is around 12 p.m. Sorry, the ATR is 555. So the ATR is actually, just like I said earlier, is actually the volatility of Bitcoin at that particular point in time. And why do we use ATR to certain stop loss? We use ATR because it helps us to be able to determine the volatility. If the market is to swing both ways, either up or down, we will not end up getting kicked out. I'll be using some of my trades to show you guys where I apply this ATR and how it's being used. So let's look at some of the few trades I took on Bitcoin. And remember, ATR is not just not used basically just for Bitcoin alone. It's used in all forex space, just an indicator, as you know. And we basically use it on volatile pairs. When I mean volatile, I'm talking about pairs like Bitcoin, gold, and the rest. That doesn't mean that it's not being used on other pairs actually, but it's basically more used from volatile pairs, pairs that are very volatile. And when you apply ATR, it gives you this kind of opportunity whereby you only lose your trade when your trade is when you are completely wrong. But all this kind of thing that you have that trade will come and hit your stop loss and reverse and start going in your direction. The ATR always tend to avoid it. In other words, it helps you to avoid unnecessary losses that you are not actually meant to incur in the first place. So looking at my screen right here, you see this BTC, and this is the time frame is 15. And as you look at it right here, you see right now, just like I told you guys, as it stands now, the ATR of Bitcoin at this particular moment has actually dropped to 300. When I initially when I started this video, it was actually on 330 right now. And let's look at possible trades we have to take and where ATR assisted us. Now look at if you look at it, Bitcoin has been on the it has been ranging for since I think starting since Friday last weekend, and before then we actually experienced a massive trend. Okay, and in that massive trend is the massive trend has been characterized with higher highs and lower lows. Now looking at it, the first trading opportunity I had, or rather the last trading opportunity I had recently on a using the smart money concept was on Thursday. Actually, it gives us that setup on Thursday, which we place our buying opportunity and waiting for it to come and tap into the zone. Now, this was the buying opportunity right here. It gave us this entry candle right here. And what do? We took our rectangular drawing two by on our trading view and we extended it waiting for market to come and tap into the zone. As you can see, Bitcoin actually eventually came down to that zone and tap into the zone and continue going up. Now let's look at it now. If we are to place our long position, definitely just like we have been told, we place our long position somewhere here and our stop loss is supposed to be below our entire candle or rather the inducement candle, which is here. And our take profit is often the high before the pullback. Now this is a high before the pullback. Now let's look at this particular trade now. As you guys can see, this was actually a loss because the market swept and it kicked us out and got no going up. That is if we actually place our stop loss without using the ATR. Now let's apply the ATR and see if we actually lost this trade. The ATR at that particular point in time was almost 500, and the the low the value of that particular candle at that particular point in time is 101, 101,000. Now, okay, how do you apply this ATR? ATR is definitely, if you are taking a long position, you minus ATR minus the value of the low of that candle which you place your entry on. Then if you are taking your short, it's the ATR plus the value of the high of that particular candle which you are taking your, which is your entry candle. Now, okay, let's say this is our entry point of entry, and our stop loss is meant to be at 101, which was the value. What do we do? Minus 101,000 minus 500. So what we have is 99,500, and this is 99,500, as you can see. What do we do? The market actually absorbed it, and it did not kick us out. And extending this listen, did the trade eventually close successfully? Yes, it did. It closed successfully. That was on Sunday. Actually, after the frequent ranging and blah blah blah. And then the end of closed successfully. Now this is one of it. Now let's look at another other trades that we also took using applying some ATR. As you can see, when you book this structure, it gave us an entry here, which signaled a continued bullish. So what do? We took our rectangular line, we do it, and we place our uh, limit buy, hoping for it to get to the zone and take off. Now, okay, we place our limit buy right here. As you guys can see, we place our limit buy right here, and we place our stop loss. Just like I told you guys, stop loss is meant to be at the low of the candle that will at the low of our entry. Now, this was supposed to be our stop loss, and our take profit is supposed to be at the previous high, which is here. As you guys can see, and this was our take profit here. Obviously, what happened? The market actually kicked us out. Obviously, it did. It's broke down, went down before it started going up. Now let's see if we are to place our stop loss by the convention, by the traditional way we know by placing stop loss, which was at the low of the previous candle. This was our stop loss here. Obviously, the market will kick us out. But let's apply the ATR and see if the market actually kick us out using applying ATR. The ATR value at that particular point in time is the ATR value at the particular our entry candle was 300. 300. Now, okay, what was our previous low? What was our previous low? Our previous low is 96,000. 96,000 minus 300. So we have 97,000, 95,700, which was here. As you guys can see, it actually came very close to our stop loss, but it did not trigger the stop loss and proceeded, and it hit our take profit. And it actually continued hitting up actually, which was around that 1 to 1.4 is to reward. This was also a win. But without the ATR, it could have turned out to be a loss. Now, the next example I'm going to give you guys is on this particular one also, which is also a long position. As you guys can see right here, we have looking at this point, we have an equal lows, which signal is support zone. And that equal, what do? We took our rectangular tool, we mark the beginning of the week of the candle to the end of the week of the candle. We extended it. Now we're not waiting for another candlestick to come in here and have a rejection with an engulfing candle. What happened? We had it here. As you can see, this was the candlestick here, this green bullish candlestick. We had it had a rejection, and it also came to our zone with also a bullish buy. So what do? We take our we place our long position here. Actually, this is not a limit buy, this is a market buy, because we are not actually sniping this position, we are actually taking this position based on our resistance and support strategy. So we don't snap on resistance support. We only take account to market buy whatever the market gives us. Now, where is our take profit? Take profit is also always at the highest point before we the pullback started happening, and this was the highest point, as you can see right here. And what happened? Let's extend it and see. As you can see, the market actually eventually kick us out, placing our stop loss below the lowest week of the head of the leg. Now look at it now. Let's apply our ATR and see if we eventually lost this trade. This was our lowest week, which was what was the point? 250. That was the ATR. Now adding to minusing 250 minus the lowest week, which was 93,500 minus 250. What do we have? We have 93,250, and this was 250 right here. So as you can see, what happened? It's even when the market eventually went down, tapping, and this was it grabbed liquidity and sweep people out. What happened? It did not kick us out. As you guys can see, the trade eventually closed successfully, and that should be on the on Thursday. So now, what's the benefit of this ATR? This ATR, second I can know, the market is always full with manipulators, people who sweep people's, like retail traders like you and I, sweep our liquidity. Now, okay, if we actually apply it ATR, it's whenever these people place their buy order, they place their buy order basically at the point of liquidity of the point of our stop loss rather. Now, okay, if we use this ATR, it helps us to mitigate that market volatility. Even if they place their buy order it and they try to manipulate the market to get to that point, the ATR indicator will help us to avoid all those unnecessary losses that we are not meant to take. Understand? Traditionally, obviously, a lot of people will just be placing their stop loss and here, and they'll be shouting that the market always hit my stop loss and got no going my way. But with this ATR, obviously, it will definitely reverse to be the case. And whenever you hit your stop loss, you know for sure that you're actually wrong, and that is why your stop loss was triggered. So this is just basically on ATR, and our next class will be on MACD indicator. So I just want to say thank you so much if you have watched, and I believe that this will be able to adding this particular indicator to your trading arsenal will definitely change the game for you and will actually increase your winning trades actually. So thank you so much and also enjoy your day. You can also the next classes will be coming on soon. So stay tuned and go nowhere. Thank you.